So here we are, April 2021, tax time. Have you ever considered what your investment advisor does for you in order to enable you to reduce your taxes? Hi, my name is Kareem Zakir, and if you enjoy this video, I would kindly appreciate a like and or share it with your friends and family. So before I touch on taxation, I want to simply recap what the markets did in the first quarter of 2021. There's been tremendous speculation going on in the markets. It's actually very reminiscent of 1999, where the poorest quality investments have been doing very well, and the best quality investments have been doing either poorly or have been stagnating. But fear not, fundamentals will come back. They always prevail, and we will revert back to the means. Back to taxation. So what does your investment advisor do for you in order to help you reduce your taxes? One of the first things I do for my clients is I try to make sure that I put the right investments in the right accounts. For instance, you want to try and earn your interest from bonds in a registered account, such as an Rrsp or a TFSA, a tax-free savings account. In addition to that, you want to also be aware that dividend-paying stocks from a US company, the likes of Apple, for instance, that pay a dividend on a quarterly basis, in Canada is taxed as interest. So you do not get entitlement to the dividend tax credit because it is not a Canadian corporation. And so I try and put the US stocks in an RRSP account. Now, the same doesn't apply in a TFSA because Canada and the United States don't have a tax treaty in reference to that account. But for the RSPs and the RRIF accounts, we do have a tax treaty that allows us to generate the income within those registered plans without a withholding tax. Outside of the RSPs or RRIF accounts, you will be subject to a withholding tax of 15% on any income earned from a foreign company. Second, there's another tax shelter that's available to everyone, and it should be taken advantage of as much as possible, income permitting, of course, is the Rrsp Contribution. A lot of people question, am I better off putting money into my RSP and getting a tax deduction, or am I better off putting money in a TFSA and just having the money grow tax-free? Well, really, it depends on you, on your level of income. If you're at the top marginal tax bracket, which is over 50% in Canada, then you're better off maximizing your RSP contribution because you're going to get to reduce your taxes by 50% of that contribution. Another tax strategy that's often overlooked by high income earners is income splitting with your spouse, for instance. The higher income spouse can actually lend money to the lower income spouse and charge the Revenue Canada prescribed rate, which is currently 1% per year on that loan. Now, the lower income spouse can take that money and invest it accordingly. For instance, if the lower income spouse can generate 5% on the investment and has to pay back 1% to the higher income spouse, which the higher income spouse must declare, the 4% difference gets declared in the lower income spouse's income tax and can amount to significant tax savings over a number of years. What you need to do for that, though, is you need to establish a promissory note. Another tax strategy that's often overlooked is the capital gains and losses in a year. If you have a very large gain from the sale of a property, my clients should advise me so that I can try and create capital losses in the markets for them. I could simply sell a position at a loss and buy it back after 30 days, and it'll count as a capital loss and it'll offset the gain that you've generated from selling that property. So this is often overlooked. People often forget, but it's something that must be considered. And one last great tax shelter that's available, but this is exclusively to the very highest of income earners, meaning if you earn over $200,000 a year or more, then you can take advantage of what I call flow-through share funds. These flow-through shares offer you generous tax deductions and will also help you on the capital gains front when you come to liquidate those flow-through shares on the Quebec side. where most of the gains are totally exempt from income tax. Please seek out a tax specialist to confirm everything your advisor is saying. Lastly, if you'd like to have an appointment with me, feel free to contact me. We can have a telephone or a virtual appointment at your convenience. In reference to being back at the office, I don't see us going back before late summer. We'll have to see how things transpire. But for now, I'm still available to you, even though I'm working from the house. My team is available to you. We're all working from our homes, so don't hesitate to reach out to us if you need anything. Have a wonderful spring, and I'll see you in the summer. Bye.